The head of the Lloyd's of London insurance market recently warned of a perfect storm affecting his industry. There have been so many natural and man-made catastrophes, one more could seriously damage the industry that he is effectively the head of. But how can that be? How can things have gone so wrong? Well, the answer, according to Dr. Robert Davies and Chris Storey of Cass Business School, is a lack of innovation in the leaders of this industry. I asked Dr. Robert Davies first how this had come about.
It's an unexpected mix of events, particularly for the insurance sector, of catastrophe losses. We've seen, for example, what's happened to BP, which has absorbed a considerable amount of insurers' reserves. Now, what is the issue if there's another catastrophe? We're concerned with the whole issue of unpredictability, coupled with, obviously, very, very great uncertainty in the economic environment.
It sounds as though you feel as though leaders in the insurance industry were not well placed to cope with the perfect storm. Why not?
Well, it's a comment I think applies to leaders in other sectors as well, from our research. But what the perfect storm could tell us is that we're facing a new decade. The levels of economic growth that we've had in the past may be behind us. We may be entering a new period of very, very low economic growth that changes strategy and the strategic agenda. Rather than focusing on growth, top-line growth, profit growth, the focus changes. The focus changes to profit consistency. Now, profit consistency may demand new types of innovation, a substantial move away from the historic, the older forms of innovation a lot of our respondents spoke about. For example, offering new product, new service innovation and process innovation to do the job, for example, more cheaply than it could be done before. There was a lack of awareness of new forms of innovation that we think are particularly relevant in such a low growth environment. For example, customer experience innovation, the experience that the customer has when that customer interacts with the organisation, finding new distribution routes, finding and discovering new markets, as for example eBay did over a decade ago.
So what led you to that conclusion?
We conducted a study with approximately 20 corporate leaders, and we used a process called cognitive mapping to really try to get inside the brains of corporate leaders in terms of how they framed innovation, what innovation meant to their organisations, where they saw the barriers, where they saw the benefits. And it was through analysis of that information, and we were quite surprised to see that none of our respondents, for example, could refer to what we call a fully broad innovation palette. There was a tendency to focus, as I said earlier, on those two historic forms of innovation that probably have been around for at least the last 3 or 4 decades. That's product or offering innovation and process innovation. There was far little talk about 4 other forms of innovation that are important: searching out and inventing new markets, looking for new distribution routes, new ways of contacting customers, thinking about the customer's experience, not just the product, but the experience when the customer interacts in the organisation. But there's one other form of innovation which is particularly important, and that's to do with an organisation's most important asset. The most important asset, the people. And that's innovation in the way that people are led and managed.
This must have been quite a surprise, because a lot of people would expect that those at the top of an industry would be at the cutting edge of innovation.
In some respects, yes, the findings were surprising. A number could articulate a fairly broad range of innovation types, but I said none of the respondents covered our complete innovation palette, as we called it. Possibly our biggest surprise, however, was not so much in terms of the range of innovations that leaders spoke about, but the fact that there appeared to be an apparent disjoint between strategy, business planning and innovation. The two were not joined. That was one of our most fundamental findings, that thinking in terms of innovation seemed to take place in a separate environment to the environment where business is thought about and planned for their future strategy. And in our view, the two are intrinsically wedded together.
Let me turn to Chris Storey now. Chris, it sounds as though it should be an obvious answer, but it clearly isn't. Why is innovation so important?
Well, I mean, innovation is important. I mean, it's often said it's the lifeblood of an organisation. And what you basically find, if you don't innovate, your competitors will. Customer needs are constantly changing, and we, as an organisation, the insurance companies constantly have to update and adapt and adopt different practices to serve their customers better. If any one particular organisation doesn't do it, you know somebody else will change, and they'll take the market away. Going back years and years to the direct line, they came along, changed how they dealt with customers, and everybody else has adopted practices like that. The internet companies have come along and done a similar thing. So you're constantly having to adopt and to change. And especially when there's a time of crisis, or there is basically a lot of uncertainty in the marketplace, you're finding that with costs being driven down and consumers being very risk adverse, then often you have to innovate even more.
But I suppose there will be a lot of leaders listening to this who will feel, well, if it ain't broke, don't fix it.
And the interesting thing is, when should you start innovating? Should you start innovating when you're failing? When you're actually on that downward spiral of sort of profitability being cut, and your budgets are tight, which is very difficult to innovate and trying to put money into innovation if your budgets are your profits going down. And at that stage, it's maybe a bit too late. What you should really be thinking about innovating is when you're at the top, because when you're at the top, you've got the resources to invest. So you can invest more money, you can bring new systems in place, you can change things about. And innovation is costly, so it is an investment. So when you're at the top, that's the best time to invest, so you can stay at the top, rather than basically waiting until you're starting to decline.
Dr. Robert Davies, what's the key lesson of your research?
I think there are two key lessons. The first is to move away from historic views of what innovation is. Let's move away from innovation just as offerings, products, services, and lower cost processes. Let's get into exploring how we interact with customers, how we create new markets, as I said earlier, following the example of eBay and EasyJet, how we find new distribution routes. I think these are critical actions in a low growth environment. Also, we've got to don't forget the inside of the organisation, most important resource, the need for leadership, innovation. But the last message that I really would like to give would be to be very, very careful in the way that leaders propose to manage the innovation process. That is to create and craft the capability to innovate in what may not be an innovative organisation. And that's where we found a major issue, a major problem. A substantial proportion of the leaders that we interviewed spoke about obstacles, barriers to innovation in terms of culture, in terms of skills. But when they came to articulate what they were going to do, they spoke about using formal changes to structure, introducing formal product development processes, rather than tackling these issues head on. And our previous research has shown us that to succeed, leaders have got to tackle these issues head on.
Dr. Robert Davies, Chris Storey, thank you very much.